These are 8 top big cap stocks with large percentage gains today. While watching bullish price actions, let us inform you. Our review on LOCL. Local Bounti Corporation is an innovative player in the indoor agriculture space, utilizing its patented stack and flow technology to sustainably grow food. By blending vertical farming and early plant growth with greenhouse farming for final maturation, Local Bounti can produce high-quality food while using 90% less water, land, and pesticides compared to traditional farming methods. With facilities spread across the U.S., they serve around 13,000 retail locations, offering a variety of products including lettuce, cress, and other value-added items. But recently, the stock has caught a lot of attention. Charles Schwab, a key shareholder, just made a significant move by purchasing 1.7 million shares worth about $3.4 million. Additionally, Director Charles R. Schwab acquired another 71,000 shares. This hefty investment definitely signals confidence in the company's potential, especially after some major corporate updates. Local Bounti has undergone a leadership change, with Kathleen Valusek stepping in as CEO, which investors hope will drive the next phase of growth. Financially, things are looking more stable as the company secured $27.5 million in new funding and restructured its debt, cutting it by nearly 40% and extending the maturity date to 2035. This should give them the financial flexibility needed to keep expanding. They've also been busy expanding their Washington and Texas facilities and improving their distribution network, particularly with retail giant Walmart. That said, Local Bounti did fall short on revenue for Q4, largely due to some product mix recalibration at their Texas facility, which slowed down production. But it's not all doom and gloom. Investors are still optimistic. The company is projecting positive adjusted EBITDA by Q3 2025, and analysts like those from Lake Street and Oppenheimer are maintaining their buy ratings, with target prices ranging from $5 to $10. Today, the stock jumped an impressive 68%, with around 490,000 shares traded. Given the major financial moves, leadership changes, and long-term growth prospects, this could be a stock to keep on your radar. Whether this surge holds or is part of a bigger rally remains to be seen, but with such a positive shift in the company's strategy and financial outlook, it's definitely one to watch in the months ahead. Our review on MHLD. Maiden Holdings Ltd is a Bermuda-based holding company that focuses on managing and owning businesses in the insurance and financial services sectors. The company offers a mix of reinsurance solutions, legacy services, and specializes in helping smaller insurance companies, particularly those in runoff, with their capital and risk management needs. Their operations are split between a diversified portfolio of reinsurance businesses and a segment dedicated to business, seeded by AmTrust Financial Services. Now, the stock has been catching quite a bit of attention, jumping a solid 39% today on 630,000 shares traded. This kind of surge doesn't happen without a reason, and it's likely tied to some positive developments around the company's business or overall market sentiment. Maiden Holdings has been steadily working on strengthening its reinsurance operations, and with its focus on specialized markets in Europe and its reinsurance deals with AmTrust, it could be positioning itself for some solid returns in the future. Given the size of today's jump, it's clear investors are reacting to something significant, whether it's market conditions or perhaps internal company moves. But the surge is definitely one to note. The 39% spike suggests that there's some real optimism around Maiden's future prospects, especially in the reinsurance and financial services markets. Whether this trend holds is something to watch, but for today, investors are definitely seeing this as a stock with potential. Our review on ALDX. Aldeyra Therapeutics Incorporated is a biotech company focused on developing therapies for immune-mediated diseases, with a particular emphasis on their lead product, Reproxalap. This is a promising candidate aimed at treating dry eye disease and allergic conjunctivitis. They've got some other immune-based therapies across various disease areas. However, things took a tough turn on April 3rd, 2025, when Aldeyra received a complete response letter, CRL, from the FDA for Reproxalap. The FDA raised concerns about the efficacy data from the trials, pointing out methodological issues that have put a serious roadblock in the approval process. As a result, Aldeyra's stock took a massive hit, plummeting 75% in pre-market trading. That's a pretty steep fall for investors who are hoping for a breakthrough. But here's the silver lining. Aldeyra isn't backing down. They've already made it clear that they plan to run additional trials to address the FDA's concerns. Their goal is to resubmit the new drug application, NDA, by mid-2025. While this means further delays and additional costs, the company is still moving forward and hoping to iron out the issues raised by the FDA. This gives some hope that Reproxalap could eventually reach the market, even though it may take longer than expected. Despite the recent blow, analysts remain optimistic about Aldeyra's long-term prospects. Several firms, including H.C. Wainwright, have reaffirmed their buy ratings and kept their price targets at around $10. The potential for Reproxalap to offer a better treatment option for dry eye disease is still there, and if Aldeyra can get it right, it could really shake up the market. Plus, they've got a strong financial position and are continuing to progress with other studies that could bring in more valuable assets down the road. So, while it's been a rough patch for Aldeyra, it's not the end of the story. They've got a solid pipeline and the financial backing to get through these challenges. Investors will need to be patient, but if the company can turn things around with Reproxalap, there's definitely a lot of upside potential here. Our review on NTCL. NetClass Technology Inc. is a holding company based in Shanghai, China, that focuses on providing a range of online education solutions and IT services. Their offerings span across smart campus solutions, mobile learning platforms, and even innovative systems like their blockchain-based education credit system and epidemic prevention and control system. Now, recently, NetClass made an interesting move that has caught the attention of investors. On March 27, 2025, the company launched its 2025 Equity Incentive Plan. The idea behind this plan is to align the interests of the company's employees and shareholders by offering equity or incentive-based compensation. The goal is to keep key talent motivated and committed while also strengthening their overall position in the market. And it's already paying off in terms of stock performance. Following the announcement, NetClass saw a massive 33% spike in its stock price, with most of the gains coming in the power hours. A strong indicator that the market is reacting positively to the news. With only 189K shares traded, that's a pretty big jump, and it reflects a 55% breakout during the late trading hours. This move seems to have triggered investor optimism, and rightfully so. The plan shows that the company is focused on its long-term growth and is actively looking to retain the talent that will help them reach their goals. For investors, this is a strong signal that NetClass is serious about its future. By offering incentives to its employees, they're not only ensuring that key people are on board for the ride, but also indicating confidence in the company's ongoing developments and market strategy. As the company continues to grow and expand its services, there could be more upward momentum in the stock if this initiative translates into even stronger business performance. Definitely one to keep an eye on. Our review on RGC. Regencell Bioscience Holdings Ltd is a bioscience company making waves by focusing on the research, development, and commercialization of traditional Chinese medicine, TCM, to address neurocognitive disorders. Their focus is on conditions like attention deficit hyperactivity disorder, ADHD, and autism spectrum disorder, ASD, using TCM formulas to potentially offer an alternative or complementary treatment for those struggling with these conditions. They've launched 3 liquid-based, standardized TCM formula candidates designed to target mild, moderate, and severe cases of ADHD and ASD, which could be a game changer in how these disorders are managed. Now, today's stock performance is really catching attention. Regencell is up a solid 32%, with only 265,000 shares traded, which is a pretty impressive spike, especially for a company with such a specific focus. This type of movement is noteworthy because it reflects investor optimism about the company's potential, especially considering that TCM as an alternative treatment for neurocognitive disorders is still a relatively niche but growing field. The increase in the stock price could be linked to several factors, perhaps a renewed interest in the company's treatment options, or maybe the market's reaction to news or progress in their clinical trials or regulatory approvals. Whatever the reason, this boost in stock performance highlights that investors are excited about Regencell's future prospects as they continue to develop and possibly gain more traction in the market, especially if their TCM formulas show promising results. There could be more upward movement on the horizon. For investors, it's definitely worth paying attention to how Regencell's research and development progress, particularly if they can continue making strides in the ADHD and ASD markets. It's a sector with a lot of need for innovative treatments, and Regencell is positioning itself as a potential leader in this space. Our review on NTHI. NeOnc Technologies Holdings Incorporated is a clinical-stage biopharmaceutical company focused on developing treatments for aggressive brain cancers and other central nervous system diseases. They're pioneering novel drug delivery methods, like intranasal administration, to enhance the effectiveness of their lead products, NEO100 and NEO212. NEO100 is a purified form of parallel acid being tested for brain cancer, while NEO212 combines temozolomide with parallel alcohol and is specifically targeting brain metastases from cancers like lung, breast, and skin. Today, the stock surged 31%, despite light trading volume of only 93K shares. This spike suggests a growing sense of optimism around the company's innovative approach to treating challenging brain cancers. The company's progress in clinical trials and novel delivery methods has caught investor attention, and if these therapies continue to show promise, there's a lot of potential here. However, it's important to keep in mind that with clinical stage companies like NeOnc, there's still a fair amount of risk involved. Success in trials is never guaranteed. But for those who follow biotech closely, this could be one to keep an eye on as it develops further. Our review on NWTN. NWTN Incorporated is a green technology company making waves in the mobility and clean energy space. Based in Abu Dhabi, the company's focus is on passenger-centric electric vehicles, green energy solutions, and autonomous driving technology. Their core innovations include modular electric platforms, advanced battery management systems, and digital connectivity, all designed to enhance the driving experience while staying sustainable. Today, the stock popped 23%, with some impressive 30% breakouts earlier in the session, though it did fade a bit after hours. This kind of movement shows that investors are starting to take notice of the company's progress. There's definitely some excitement around NWTN, especially with its vision for expanding its electric vehicle and green energy solutions across the Middle East, North Africa, and into Asia and Europe. But as always with these high-growth, innovative companies, there's volatility. While the spike is encouraging, the fading after hours could be a reminder of how unpredictable these stocks can be. If NWTN continues to deliver on its promises in electric vehicles and green tech, this could be a name worth following. Just keep an eye on how the market reacts in the coming days. Our review on PAMT. PAMT Corp is a holding company that operates through its subsidiaries, offering truckload dry van carrier services. They transport general commodities across the U.S., Canada, and even into Mexico, making them a key player in North American logistics. Their extensive reach from Ontario and Quebec to Mexico's Laredo and El Paso gateways gives them a solid position in the transport sector. Today, PAMT saw a 22% jump in stock price, with 198K shares traded, as investors reacted positively to the company's announcement of a modified Dutch auction tender offer. The company is looking to buy back up to 435,000 shares, or about 2% of its outstanding common stock, at a price range between $14 and $17 per share. This move is seen as a shareholder-friendly initiative, as it reduces the number of outstanding shares, which could potentially boost the value of remaining shares. This kind of stock buyback is often viewed as a signal that the company believes its stock is undervalued, and it could also indicate a healthy cash position. The market responded well today, but with the offer set to expire on May 1st, 2025, it will be interesting to see if this momentum holds up or if the stock settles once the buyback window closes. If PAMT continues to execute well on its operations and the buyback, this might signal further investor confidence in the company's growth and strategic direction. Please subscribe, give the video a like, and watch more from our playlist. Thanks.